All right. Hello, everyone, and welcome on with huge gratitude to Robert Breedlove, one of the most prominent and well spoken leaders in the Bitcoin world. He currently hosts one of the most listened to Bitcoin podcasts globally and is a published author of multiple Bitcoin related books. He's likely one of the top people who have helped and continue to help catalyze Bitcoin adoption globally. Robert, absolutely honored to have you here for a conversation.
Well, thank you for that introduction. I don't know that I'm one of the top catalyzers of Bitcoin adoption, but I do appreciate it nonetheless.
I feel like there's so many different ways that you could look at, adoption of Bitcoin and, for sure, like the people who are doing the development and miners and people securing the infrastructure, I feel are so vitally important. But for this movement to really catch on and become viral, for lack of a better term, I really feel like there does need to be a grassroots movement. Top down certainly works in a lot of systems, but I feel like for something that's frameworked like Bitcoin, the bottom up approach from the people and creating that grassroots movement, which I feel like has been the reason for its success, is to me, what you're doing through just speaking about it and making things click for people in their minds on like, why is this important? So I'd probably rebuke that and say, maybe not in your eyes, but certainly what it appears to me, I think you're doing really great work.
Well, I really appreciate it. And I'm honestly thrilled to hear people rendering value from the work because, as you can imagine, it could be a bit isolating at times. You're kind of just reading, writing, going down this rabbit hole, not sure if you're crazy, testing your ideas. And then a lot of that's done in solitude, which is good. I enjoy solitude, but at the same time, you don't get this reconciliation to the real world until you see people in person. And, that's one reconciliation. I guess Bitcoin's meteoric growth has been another, obviously. I would argue that's the thing converting more people than anything else in the world ultimately is because we are self-interested individuals, and price is one of the primary mechanisms of commanding attention.
Mm-hmm. I do agree that, that's certainly what gets the headlines on the news and brings it to mainstream and does get that huge interest. Is it the right audience? Or is that even a valid concern? Like, is there a quote unquote right audience? Sometimes it's just these people coming in, seeing it as a trading vehicle rather than a solution to a lot of our problems. So, and then they tend to be a little bit more flippant, but who knows, maybe that's the first step down the rabbit hole for them.
It is. So, price piques curiosity. And so I would say almost everyone that comes into Bitcoin to make money or with the hope of making money. But if you trip far enough down that rabbit hole and you start to understand the why of Bitcoin, the people that really stay and become deeply convicted and aligned with the principles of Bitcoin stay not to make money, but to remake the money, right? We're here to fix the money. So, and that's the cohort that matters ultimately, because when push comes to shove, those are the people that are stacking sats every day. Those are the people that will never sell. Those are the people that will bend over backwards to defend the mining network, petition local governance to accommodate, to be accommodative to Bitcoin, all of these things. So when we say the right people, we have to be careful because we all come in for the wrong reasons, I think. I think every human that's in Bitcoin came in for the wrong reasons, which are to make money. And then the right reasons, being the moral justification for its existence, causes some minority of those people to stay forever.
Well said. And for you personally, what was it that initially sparked the curiosity of Bitcoin? And then, as you started the research rabbit hole, what was it that maybe shifted the perspective or made you realize, okay, this is actually something incredibly significant that I want to spend a lot more time on?
Yeah, it's a weird story for me actually, because it was 2004, 2005 when I became acquainted with A Creature from Jekyll Island, which is a book about the inception of the Federal Reserve and the mechanics of central banking more generally. That my epiphany at that time, after spending a lot of years curious about economics. I read the Economist magazine religiously for years. I just read a lot of books on the topic, but I was not into Austrian economics, so I want to be clear about that. I didn't discover that until after Bitcoin, and that was the gap in my thinking. And I think there's a gap in many people's thinking because it's not taught in mainstream curriculum. My epiphany there was that central banking is the primary ethical and incentive problem in the world, that we have basically an institution of systemic theft integrated into our quote unquote capitalist free market economy. It's an anti-capitalist institution. It'd be like saying you're a freedom lover and running a prison or something. I don't know. It just doesn't make sense. It doesn't. Maybe that example doesn't make sense, but you can't have a capitalist economy running on a central bank, because a central bank is a Marxist institution, quite literally. Measure number 5 in Marx's 1848 Manifesto to the Communist Party is an exclusive state monopoly on cash and credit. You cannot have a free market capitalist economy where money is one half of every transaction and your money is Marxist. That means you're one half, Marxist. So that was a rather dim realization in 2004, 2005, because there was no viable solution to central banking. It was just like, wow, here's the problem, or a big problem, but there weren't any really practical good steps to go about fixing it. You could join the Libertarian Party, you could convert some of your wealth to physical gold, bury it in your backyard. Just not a lot of very practical, systemic steps to take to resolve the issue of central banking. So I kind of just put it in the back of my mind and moved on with life. Went back to pursuing the almighty dollar. And I had heard about Bitcoin probably in 2014 originally, but I did not pay attention. I was just another one of those people that wrote it off. My initial impression was that it would be kind of version 1 of what would later become something that would be meaningful. But I just hadn't studied it close enough, basically. I didn't look at it. And it was, funny enough, in 2016, going into 17, I was making a career transition. So I'd opened up a lot of time for myself, starting my own company. And so I was studying, reading a lot, just trying to figure out, what's going on, how to position myself. And it was through Ethereum at the time was marketing itself as a smart contract platform. And I don't know where I saw the advert for that originally, but the term smart contract was very salient to me. I was like, I need to look into this. What the fuck is a smart contract? And I started doing some homework. And when I found Nick Szabo's work written on smart contracts in like the mid 90s, 95 or 97, and he described like the prototypical smart contract as the vending machine, something that automates commercial relationships between buyers and sellers. My light bulb moment was, whoa, oh my goodness, the whole finance industry is a smart contract. It doesn't do anything other than connect buyers and sellers or lenders and borrowers. It's not creating factories or equipment or goods. It's just an informational apparatus for connecting, like I said, buyers and sellers or lenders and borrowers. And so I was like, okay, if this technology is capable of automating a lot of these relationships and software that we today conduct with human beings, then that's probably going to be a really big deal, because the finance industry is a very large proportion of the global economy. It's not I think at the time it was like 8 or 9% maybe of the global economy, but that's a substantial portion. If you can automate away, if it's $100 trillion a year GDP, which might be a slight overstatement, you're talking about $8 or $9 trillion of value. So I was like, oh, wow, this is going to be a big deal. I'm going to buy some of this stuff and learn more about it. And as I always say, where my money went, my mind followed. I started studying what I owned much more closely. I owned mostly Bitcoin because that was the largest market cap weighted crypto asset. And when I read Safeteen's book, The Bitcoin Standard, like pretty much the weekend it came out, I think April 2018. I think that was the last piece for me that I had not plugged into my mental model was Austrian economics. I'm trying to think. I maybe read a little Hayek before that, but not. I just hadn't gone down. I hadn't gone into Austrian economics, and his book is a great introductory work on that type of thinking. And that was like my big aha. I was like, okay, it's Bitcoin is a really big deal. Like it's disruptive to gold, disruptive to central banking. Restores power to the people. All of these things. So, for me, the what of Bitcoin, very difficult actually, because you need to understand a little bit of a lot of things, right? You need a little computer science, a little network theory, some economics, some real economics, some Austrian economics, some history, game theory, some Darwinism, biology, incentive structures. You need this very multidisciplinary approach to understand the what Bitcoin is. But the big why, and the reason I'm so passionate about propagating this message is that I think it's the ultimate tool for human freedom. It's been long said that money is the ultimate tool for human freedom, and Bitcoin's effectively the ultimate money. So I think, as we kicked off the show here, you were talking about conservation of energy. That's all people want to do, right? This whole game we're playing is just an extension of Darwinian reality. In the same way you want to eat more calories than you expend to stay alive, you want to have higher economic inflows than you do outflows to become more prosperous. And to that end, property that cannot be violated is very useful. And Bitcoin is the least violable property in human history, right? It's very difficult, if not impossible, to separate a Bitcoiner from his Bitcoin if it is custodied properly. Cannot be inflated, which is a very popular way of violating private property today. And, to the extent that we violate private property, I think we undermine the basis of civilization. And I would argue that's directly related to how much of the psychosis we're seeing in the world, that our socioeconomic systems are being corroded through the violation of private property. So something like Bitcoin is more important today than it's ever been.
Fully agreed. And I'm curious if you could expand a little bit on how you see things like inflation, taxation, more Keynesian style economics versus something like Bitcoin, and how that does impact, the socioeconomic landscape and, the relationship from one human to another.
Yeah, sure. I think one of the most useful framings is to first just approach the idea of wealth creation. And, again, wealth is anything that is going to accelerate a human being toward the satisfaction of their desires. So, I don't know, if I desire to go from New York to Los Angeles and all I have are a pair of shoes, it's going to take me a while, right? I don't know how long it takes to walk from New York to LA, maybe a month, something like that. But if I have a more sophisticated form of wealth or capital, like a car, I can do it in, 35 hours, something like that. Or if I have an even more sophisticated form of wealth or capital, like a jet, I can do it in 4 hours. So it's this idea of satisfying human wants at a faster rate. That's what civilization is, right? Like you're sitting in a nice home right now, you've got a bookshelf behind you and a nice microphone and obviously a computer to do this. Absent any of these things, you'd be really concerned about how you're going to have shelter, how you're going to eat, how you're going to dress, how you're going to communicate with me. It would make solving your problems a lot more difficult, and in fact would reduce the space of problems you could solve, because you'd probably be more worried about shelter tonight than you would be about recording a podcast if you didn't have these things. So the accumulation of capital or wealth is directly correlated to civilization, right? It's how we satisfy our wants, and it's how we accord with one another in a peaceful way. And, taxation and inflation, we've been kind of trapped in this situation where We need to have an institution that preserves the relationship between owners and their assets, such that if someone steals your car, you have a title to your car and you can call a political apparatus or a police department and say, hey, my car was stolen. Here's the document certifying my rightful relationship to this car. I want to get it back now, right? And so we can bring force to bear to resolve the violation of your property. So that's always and always will be necessary with physical property. You need either you have to defend it yourself or you have to outsource the defense, right? You can't escape that problem. We've innovated around that problem historically through the creation of the state. The state basically is that monopoly on violence that we use to resolve conflicts over private property, hopefully non-violently, right? Typically through court systems or arbitration, something like that. Now, it doesn't have to be done through the state. There are private forms of arbitration. There's private law, but the state has always made itself kind of the modus operandi in that sphere. The problem, though, is that authority also arrogates itself the monopoly to violate private property, which is to impose taxation, also to monopolize the money so they can impose inflation, which is another form of taxation. So you have this one organization in human history called the state, the one legal organization, let me specify, that derives its revenues from non-consensual exchange. So citizens or customers don't have any say-so in the deal. You don't get to negotiate your bill with the IRS. You don't get to vote on how much money the Fed prints. We have no say-so, right? It's non-consensual. So, like a mafia or something, even a mafia, if they're selling drugs, at least that's consensual exchange, right? Now, they might also be engaged in some type of theft, I don't know, robbing 18-wheelers, or I'm trying to think of a mafia movie that I saw. Like, that's not good, but we consider that criminal. That's illegal. We've, duped ourselves into enshrining the most organized criminal enterprise in the world, which is government. Somewhat out of necessity, as I said, we needed these property rights to have an economy work. But there always was the threat of the state becoming too large and violating property too rapidly through taxation and inflation. And the problem with this, it's a very serious problem. So if you consider that it's possible to insulate yourself from the threat or risk of burglary, right? You can get better locks on your doors. You can get some guns. You can get an alarm system. So intermittent, unpredictable burglary, you can have insurance against it through these types of mechanisms. The problem with the systemic violation of property through taxation and inflation is that you can't hedge against it. What can you do, right? Again, you could bury the physical gold in your backyard, but that's not very practical, right? As soon as you want to go buy some coffee, what are you going to do? Dig it up, go buy the coffee, rebury it. You also have the physical custody risk, all of these things. So given that there's no way to hedge against it, it actually decreases our incentive to engage in savings and capital accumulation, because it increases our propensity to consume. Because, hey, if I can't secure my relationship with these assets and know that I'm going to own them and have control over them into the future, right? To the degree that is uncertain is the same degree to which I would rather consume than save. And as we said earlier, savings is the basis of capital accumulation and investment, which is equivalent to civilization. So we've been in this weird parasite-host relationship with the state throughout human history, that it was kind of a necessary evil to preserve physical private property rights, but it also diminished our ability to engage in long-term planning and savings, frankly. And so what we really needed was some property relationship independent of the monopoly on violence that's not enforceable or changeable or amendable by the state. And we had a proxy for this in physical gold, because you could hold physical gold. It was valued everywhere in the world. It was not based on a government decree. It was selected in the free market through a long series of consensual exchanges that gold became money because it best satisfied the properties of money. I go into elaborate detail on this topic on the show, so I won't do it here. And if you could hold physical gold and your government became oppressive, in terms of taxation, inflation, regulation, whatever it was, well, you could take the gold, move to another country, a more friendly jurisdiction, and vote with your feet, so to speak. So to the degree that you could physically custody gold and defend your relationship to it, you had this non-state property right that was useful for keeping governments in check. If a government, again, became too heavy-handed, let's say, it would lose citizens, it would lose wealth, it would lose tax revenue. So the gold standard, and not that it ever officially worked because it's limited technologically, specifically in portability, like it's expensive to move gold around. So this vote, it's a very expensive vote of no confidence in your government if you're going to take gold and move it out of the country. It's not something you would do lightly. That was the best proxy we had for a non-state property right that served as a check against the overgrowth of government. But of course, 1971, and again, the gold standard never really worked, but it officially stopped completely in 1971. There's no argument about that. Like post-1971, you can argue historically about how much it worked, it didn't work. 1971, it completely stopped working. There's no argument about that whatsoever. You go off the gold standard, you remove the check that individual citizens had on government oppression, and what do you see? I mean, you see the world just devolve. I always point people at this point in the conversation to the website WTFhappenedin1971.com. It's got a whole gamut of data that shows just how far we've fallen. This isn't just financial ruin that we've created in the world. Obviously, debt has exploded. There's every incentive to borrow money that's depreciating and buy things that don't depreciate. That's why people buy real estate and gold and oil and stocks, everything that can't be counterfeited. That's where you're incentivized to preserve your wealth when you're in a fiat currency standard. But also things like suicide rates, addiction, the nuclear family has broken down, right? Wages and productivity have diverged. All these things, I would argue much of the cultural malaise we observe today is rooted in fiat currency inflation as well. So I think I may have drifted from your original question, but
no, that was right on point, and I'm actually curious to hear a little bit more color on how you see like that emotional dissociation, like you say, like the nuclear family and suicides increase, and how that relates to the current fiat system. Is that just because we're in a scarcity mindset, because we're always needing to spend to preserve purchasing power that's continually depleting, or how do you think about that?
Yeah, there's a couple of ways to think about it. One is these unhedgeable forms of theft, again, they reduce the sphere of concern for people. Like there's more uncertainty, so I can't plan as far into the future, which means I'm more likely to consume, less likely to save. The less savings you have, the less investment you have. The less investment you have, the less capital creation you have. The less capital creation you have, the less civilization you have. So we've had this limiting factor on free trade, which has been the state itself. This increases scarcity in the world. Obviously, we are inhibiting the market process from satisfying human wants. Therefore, we have more unsatisfied human wants. It's very straightforward. So you have more scarcity. And that's what scarcity, by the way, is defined as that. This is another tricky term. People think scarcity is purely a supply side phenomenon, but it's not. It's wherever demand exceeds supply. So I can paint a work of art right here, and doesn't mean anyone's going to want it because I'm not really a good painter. So there's only one of them, but it doesn't make it scarce. It's not scarce until at least two people want the thing, and then they have to bid over it or fight over it. This is independent of value, right? So oxygen, very valuable for human beings, but it's not scarce yet, at least. Hopefully, doesn't happen. because there's so much of it. There's such a great supply that even our basically infinite demand for oxygen, which is every second we're breathing, does not outstrip the supply. Therefore, there's no price for oxygen, right? Oxygen is free. So to the degree that you violate property rights, you inhibit the increase of supply for the good or service. So you're increasing scarcity, right? If there's demands at a certain level, but you're inhibiting the capacity of the market to increase supply to meet demand, you're creating scarcity in the world. That's one way to look at it, right? Where these wants cannot find a way to resolve themselves, right? So there's unmet desire. And now look, I'm not a utopian here. I don't think you can ever satisfy all human wants. I think humans are weird animals. We always want more. Doesn't matter what you give us. The heart is a black hole of desire. It just will always want more and more and more. Hang out with some super rich people for a weekend and you'll see it in 2 seconds. Like, there's some of the most, I'm not obviously generalizing here. It's not like they're much more satisfied than other people in the world. They've got more sophisticated wants that are unsatisfied, but they're unsatisfied nonetheless. Another way to look at the relationship of the violation of property rights to our psychological stability individually and collectively is that property is kind of like the implicit rule set of the game, right? Like, we just all, in the West at least, we sort of assume if you buy a house and you've got a deed to the house, that you own the house, right? Those are the rules. I don't come into your house and sleep on your couch and say, hey, you know what? I don't believe this game anymore. Like, that wouldn't make sense. So we're playing this game with one another that allows us to trade, increase the division of labor, and increase wealth creation, which means by honoring the private property rights of the individual, everyone can focus on what they're best at, specialize in that, render that service to the marketplace, and depend on the self-interest of everyone else to do the same thing. So you or I don't know how to make laptops, but here we are, sitting here with some of the nicest laptops, microphones in the world. I couldn't tell you the first thing about making a microphone or a laptop. We get to enjoy the fruits of everyone's labor by playing this game, by playing this property game. Now, when you start to break the rules of the game, though, you start to violate property rights. I mean, imagine trying to play a game like Monopoly, where the rules just randomly change. A pass to go, I got $200. A pass to go this time, and it charged me $50. Like, what? I can't. And then next time, it's given me $3. Like, Broadway, the rent was $400. Now it's $800. Like, you can't. You could say that the stability of rules is the bedrock of peaceful gameplay. Right? Any game with unstable rules is not really a game. It's just going to tear itself apart because people don't want to play the game. So the game has to be, you need stable rules for players to develop a sound strategy and compete fruitfully. If you start bending or twisting the rules every few rounds or hands of play, people just get mad and they just go insane and they want to leave, right? Like, this game sucks. I want to play another game. And that's what we're doing. That's what we're doing when we inflate dollars or we, pass these ridiculous laws of any kind. You're telling people what they can do with themselves, their bodies, right? We just went through lockdowns. Not even to mention the specter of forced experimental therapies of various sorts. You're printing currency, which is an extraction of wealth by the central bank from those saving in dollars. So there's a violation of property occurring there. There's a violation of property occurring at the regulatory layer, as we just described. There's outright violations of property. If you've got a piece of land and the government wants to build a highway through your land and you don't want to sell it, well, they're going to steal it. They're going to take it. It's called eminent domain, and they'll pay you whatever they deem is worthwhile, I guess. So all of this entropy, if I could just gather all of this uncertainty under one term and call it social entropy or socioeconomic entropy, this is inhibiting our ability to play the game of the market process and expand wealth creation, expand capital accumulation, and expand civilization. So what we've been longing for, whether we know it or not, is a level playing field. That's all we want, a level playing field, rules that are applied equally to all, that cannot be bent by political machination or opinion or revolution, nothing, right? And again, that's what gold was approximately. It was just the asset that was accepted worldwide. No one could do anything about it. Everyone valued it. And that's what Bitcoin in many ways perfects, right? It's just this rule set of money. It's universally transparent. No one can change it. It's open source, so you can't hide anything in Bitcoin. Nothing is hidden. It is 100% transparency. There's no need to trust individuals inside of Bitcoin. You just trust the math, you trust the code, you trust the language. So in that way, it's something like the English language even. English language is just this open source technology. It's constantly changing at the edges, but it's got a very deep stability at its core such that we can do things like this. We can trade meaning back and forth. Well, we need something similar in the language of value. We need something that's very stable at its core, can still change around the edges for, things that unforeseen changes that might need to be made. But the core, like the supply integrity of money, which is to say the inviolability of the property right that is money, that needs to be unshakable. And that's what we have perfected in Bitcoin.
Fully agreed. And so when you look at this fiat game of monopoly with rules that not only change, but rules that aren't even clear or transparent or that we don't know, and then you look at the solution of Bitcoin, are you looking at Bitcoin as a global foundational monetary system? Are you looking at it more so as, a property that then works with the fiat system in complementary ways? Like, how do you see that dynamic? Is it a full opt-out? Is it redesigning the current system? What does that look like if you had to paint the utopian vision for a minute?
I view Bitcoin as a global, digital, non-state money, which is very important for the reasons we've just touched on. Another way to say this, it's very popular in Bitcoin circles, is that Bitcoin is the separation of money and state. So, to the degree that we can remove non-consensual exchange from the market is the same degree to which we can increase the satisfaction of human wants. Now, let me try a different approach with this. So there's a concept in Austrian economics called the inequality of exchange. Are you familiar with this? It's kind of obscure, actually.
I'd love to have it explained.
Okay, so you and I want to engage in a trade. You've got a car and I've got a boat. From an outsider's perspective, if we execute the trade, right, we trade car for boat, the outsider's perspective is, all right, that type of car equals that type of boat, right? They're equal from an outsider's perspective. Now, from our perspective, that's not the case, though, because if the boat and car were exactly equal, neither you nor I would have any incentive to execute the trade. You would be no better off. I would be no better off. So what actually happens between consensual market participants is that they trade at exactly the point that you value the boat that I have incrementally more than the car you're giving up, and I do the reverse, right? I value the car I receive from you incrementally more than I value the boat that I'm giving up, such that so long as the trade is mutually consensual, meaning that we both could have said no at any time, both could have left, disengaged, really just no, right? This is the root word of sovereignty, which we can talk more about later. That ensures that participants to a trade each leave psychologically better off. Or also, another way to say this is, all value is subjective, as the economists proved in the mid-1800s. We have both left with more psychological value. Otherwise, you left better, through your own perception of your own subjective reality, you're like, I did the trade, there was no coercion, I had the right to say no at any time, I executed the trade because I think I got a good deal. And I'm thinking the exact same thing. So we leave this trade with two individuals that have increased their psychological profit or their value, the value of what they own, right, through their own subjective lens. So the point here is that consensual exchange is necessary for aggregate value creation. If we change that trade and all of a sudden I've got a gun or I've got a legal apparatus that I can point at you and send you some scary grams and tell you to, sign the documents or else, or I've got some explicit or implicit threat that's motivating you to do the trade, not in your own self-interest, or not in your own positive self-interest, let's say, but in your own self-interest in terms of protecting yourself from coercion rather than increasing your psychological profit. That does not increase aggregate value in the world, right? I point the gun, you do the trade, you leave the trade worse off, like, well, shit, I would not have done the trade had he not pointed the gun at me. I leave the trade better off because I got the thing that I wanted at the price I wanted. But when you net those things out, that's a zero value creation. Or it could be marginal positive, could be marginal negative, it could be zero. But it's not net aggregate, right? Again, the consensual nature of exchange is what makes it net aggregate. And this is why the libertarian philosophers are so gung-ho about taxation and inflation being theft, because people don't have the right to say no. And to get to the utopian vision part of that, it's how do we get the uncertainty of this unhedgeable risk of systemic theft via taxation and inflation out of the marketplace as much as possible? The more we can minimize that, the more we can maximize aggregate value creation. And now, again, that's only subjective and psychological. However, it becomes objective and real when you consider that you're increasing people's propensity for savings and investment, right? Now I know that the things that I acquire justly, I can keep for a long period of time. So now I'm okay to the degree, let me say it like this, the more wealth you have and the more secure your relationship is to that wealth, the more willing you are to endure investment periods of illiquidity, right? I'll invest in a lumber forest or something. I put up $1 million year one. We don't harvest until year 40, right? That's a 40-year period of illiquidity. But I can endure that to the degree that I know, like the more certainty I have that in year 40, I'm going to be able to reap the profits from that thing, the more likely I am to engage in that investment process. So this is what it's all about. It's like, how do we disincentivize non-consensual exchange to the maximal extent possible? Because the inverse of that, or the inverse consequence of that, is the maximization of investment, capital accumulation, and civilization. So what does that look like? I mean, I just think it's a world with a much higher GDP. And a world with a much higher GDP is at least the contraction of cost of living, the aggregate cost of living for most people, assuming that you're on a hard money standard. So what's happening now is we increase productivity through innovation and trade, but then the central bank is able to harvest a lot of that productivity through fiat currency inflation. And again, back to that website, what WTF happened in 1971.com, that's why wages and productivity diverged so starkly in 1971. We kept getting better, faster, smarter at solving problems, which means that's real wealth creation, but it wasn't being passed back into the real economy because it was being sucked out by the central bank. So they can increase the supply of fiat currency to harvest that economic surplus for the few at the top, and then externalize the cost of that via inflation on all market actors. So you see a simultaneous divergence in wages and productivity and a widening of the gap between rich and poor because more of that wealth is being sucked off by asset holders and those nearest the fiat currency spigot. The Bitcoin utopian vision, if I have to say it, and I obviously don't like utopian visions, it reverses the whole process. Right? Central banking is the reason the rich get richer and the poor get poorer. That is the main reason why it happens. Otherwise, if everyone's on a gold standard or Bitcoin standard, the savings of every successful innovation or business are passed into all holders. The purchasing power gets passed into the money itself. So every holder of hard money benefits in the success of any entrepreneur worldwide. This is the opposite of what we have today, where it's very much more like a zero-sum game, whereas Bitcoin tilts the incentive landscape back towards a global positive-sum game, which is what economics is intended to be.
I'm certainly on side with, the aggregate value and being able to store the energy that you're putting into a system. And I guess I'd have a little bit of, questions or looking for clarity in your perspective on, let's say there's zero taxation, trade flows freely between everybody on an asset that's, fully self-sovereign and held by the person and the individual. If I have $1 million and I double my value, well, now the next year I have 2 million. For someone who has $1 broke, they're disenfranchised, whatever it is, like they lost the genetic lottery, their IQ is a little lower, they don't have, the gusto, the motivation, maybe some chemicals are off on their brain, their portfolio doubles. Now they're at $2. So it seems like, the gap of wealth inequality can spread quite rapidly in kind of like a total free market system. And then just to kind of add a little bit before you take the reins on it, how would you see this system working to be able to still assist those who are disenfranchised?
Yeah, I think we've irrigated a lot of dependence on the state to resolve issues that the community solved for a long time. There's obviously the church has filled this gap, local community networks, but another positive factor of wealth accumulation, the more wealth there is in the world, it's the same thing as saying the less scarcity, right? You're giving, so that to the same way I said that the more wealth you have and the stronger your property rights, the more likely you are to engage in a long-term investment process. In Austrian economics, they call this a lower time preference. So you're basically extending your time horizon. In every decision and every action, you are considering more slices of your temporally extended self and others, right? So you're becoming more moral, actually. And there's arguments to be made that aggregate time preference, which is expressed in the natural interest rate, is quantified by the natural interest rate, is civilization. Like the lower the natural interest rate, the lower the collective time preference is. That's a measure of how civilized we become. Now, to the same extent that you're more willing to engage in these longer term processes based on the integrity of property and the accumulation of wealth, which, as I said, is to consider more of your future self and others, you're also willing to engage in acts that benefit those around you and further into the future. So, I mean, very simply, you have more to give, right? If everyone is more wealthy, then all of a sudden it's much easier to help the less fortunate. And again, there's no element of non-consent here. I'm not saying you need to go steal from the rich and create a welfare program for the poor. I'm saying that people that are rich tend to be very engaged in philanthropy. And I think they would be even more engaged in philanthropy if we would remove the shackles of property violation and wealth accumulation. We don't see how much we're holding ourselves back as a species. We don't know what potential we're not realizing by not letting the free market process do what it does, right? We keep trying to introduce this idea that the market needs to be controlled by some political authority. Otherwise, it's going to get out of control and create too much wealth. It's like none of it registers. What's really happening when you hear this is the translation from the politician is, I'm a self-interested bureaucrat. I persist. My economic inflows are based on the theft, or based on taxation and inflation. And I I want to be relevant and have a job, so I'm telling you that the market needs to be regulated and controlled. And I just don't think that is true. And I'm not claiming to have any ideas about the ultimate final governance model, but we need more experimentation. So to the degree we have hard money that can be moved, cost effectively around the world, people can vote with their feet, they can leave jurisdictions that are not friendly to go to those that are more friendly. We will get more of that experimentation in governance models, and we'll see what works. And this is not to try and detract from those that are dispossessed in the wealth hierarchy. Any hierarchical structure, which we could talk about that, but hierarchies aren't going anywhere, right? Jordan Peterson talks about this a lot with his lobster example. They've been around, they're older than trees, right? Lobsters have been sorting themselves into hierarchies for, I think, hundreds of millions of years. I might be wrong on the number, but a long time. Humans are no different. We have to arrange ourselves hierarchically to get things done. This is not a consequence of the patriarchy or capitalism. This is a physical reality. We have to organize ourselves into these symbolic structures to accomplish results in the world. And the existence of a hierarchy always implies someone at the bottom of the hierarchy and someone at the top and people in the middle. That's how it works, And fortunately, there's many hierarchies you can participate in. So if you're at the bottom of one, well, maybe you can find one, maybe an area that you're interested in and you've trained for a lot of years. Maybe you're a janitor, you're not making that much money, so you're low on the wealth hierarchy, but maybe you're a great ballroom dancer. I don't know, and you could be one of the best in the world at that. Whatever it is. I'm not trying to take away or detract from the reality of people living at the bottom, because it's hard. It's your livelihood, right? You live under more stress because one bad move and you're dead, right? You fall off the hierarchy. But aggregate wealth creation is the tide that rises all ships. So I'm back to this element of increasing the integrity of private property, which is to say removing the element of non-consensual exchange from the market process. That is the tide that rises all ships, such that even if you're at the bottom of the wealth hierarchy, maybe you're working 40 hours a week as a janitor now to make ends meet. In this Bitcoinized world, maybe you only have to work 30 hours a week, 20 hours a week, 10 hours a week. Like, we don't know how low we can take that. And now we're trying to force this. Like, you see us trying to force this outcome today with things like universal basic income. Like, oh, just give everyone a basic minimum wage and then everyone is going to be happy. It's like, okay, stop and think. Who pays for the universal basic income? It's not the money that people want. It's the goods and services that the money represents that people want. If you extract the universal basic income via theft, you are inhibiting the market's ability to create goods and services. So we've got the right idea, like the ideal we're working towards, but like Marxism, we have the wrong solution. Marx was saying, hey, there's class warfare here. This is the problem. We need to resolve it by abolishing private property. So his assessment is somewhat accurate, right? There's different strata, social stratas of people. But to actually get that whole hierarchy to move higher, you need stronger private property, not less or no private property. No private property, as we saw and was thoroughly proven in the 20th century, reduces us to barbarity, right? Hundreds of millions murdered in warfare, mass starvation, mass corruption. So that's what I'm getting at, right? It's back to the conservation of energy, right? This is conservation of energy within the hierarchies between people at the individual level. And the more energy we harness collectively, the more wealth that rises, the tide that rises all ships. And that gives everyone the best possibility of success in the real world.
You have some absolutely powerful insights on Bitcoin, and I'm looking forward to Neuralink, where people can just plug in the What is Money podcast and get the whole 200 and some episodes downloaded instantly. I'm fully on side with, the mission that you're advocating for here and the vision. So I know you got to run here. Robert, thanks so much for coming on. It's been a pleasure and an honor.
Thank you, Jeff. I really appreciate you having me.
Right on. Have a great rest of the day. And to everyone watching, see you later.